U.S. stocks, they surged on Friday, lifted by economic figures that eased concerns about a growth in China. Earnings at JP Morgan also eased fears about the impact of failed trades that cost the bank billions. Finally, the U.S. indices saw a rally that broke a six-day losing streak. Banking shares led the gains following results from JP Morgan and mortgage giant Wells Fargo as well. On closing bell, the Dow was up 204 points. The S&P 500 index was up about 22 points or so, and the Nasdaq as well added about 42 points in the green. For the week, though, the S&P rose just about marginally, 0.2%, and the Dow as well ended just about marginally in the green. Both covered up steep losses after Friday's rally, and the Nasdaq fell about 1% for the week, pressured by poor outlooks from technology companies. Earnings this week, of course, include Intel, Citigroup, Johnson & Johnson, and, of course, Coca-Cola.
So if you really keep U.S. equities aside, none of the other major asset classes are looking quite charged up. So if you look at Asian markets, no Japan today, but Hong Kong is flat. China, just when we thought Chinese markets were looking stable, Chinese markets have corrected. You look at smaller markets like Korea, Singapore, and Taiwan, they're simply directionless. SGX right at the top of your screen, 8 points up. So I don't think for Indian markets we should expect anything implosive or explosive. We are simply stuck in a range. We are starting the week with small numbers, but the earnings season will pick up some momentum. Tomorrow we have Axis Bank, then Hero Honda, Bajaj Auto, and Friday we have Reliance Industries. So my assessment, at least for the week, is that we are stuck in a range and it will be impossible to really bet on a directional move of more than 100 points for the Nifty for this week. And if at all you have to bet on a directional move, I would say you have to bet on the downside, because suddenly hope trade, which was driving Indian markets up, that hope trade is now getting challenged. But check on other important indicators, which is crude, global volatility, and the dollar index. Global volatility on Friday night has plunged. Crude is at 102. Brent is at 86. So what's the way forward for U.S. markets, global markets, and Asian markets? Let's discuss that with Peter Cardillo, Chief Market Economist with Rockwell Global Capital. Peter, good morning. Thank you for joining us. Peter, even though the earnings season for U.S. is off to a rather okay start, U.S. equities of late have been quite resilient. What explains the strength in equities?
Well, I think a lot of it is already discounted. The fact that we're probably headed for somewhat of a mixed earnings season, a little bit somewhat dismal as compared to what we were used to getting. And I think there are, hopes that perhaps the Federal Reserve may induce another round of quantitative easing, that is QE3. And, of course, this is going to be a very crucial week because we do have a lot of economic data. We also have Mr. Bernanke will be testimonying. We'll have two testimonies later in the week, and on the state on the economy. And I kind of suspect that he's probably going to reiterate what he's been saying all along, that the economy has weakened and that the Fed stands ready to pull the trigger if necessary. However, I kind of think that there will be no QE3 until the elections, if there will be a QE3. And, of course, we also have an important meeting later in the week in Europe, European finances meeting once again, and this also could be another crucial meeting for the euro, in the sense that Germany continues to take a hard approach towards the sharing of common debt, that is euro bonds, and also some of the funds continuing to want assurances and guarantees from the peripheral nations that may be in need of the funds. So I think it's going to be a very crucial week in terms of equities. I don't think the earnings season is going to impact very much, but certainly Mr. Bernanke and the upcoming Eurogroup meeting certainly could set the tone for the remainder of the summer.
Peter, what about Asia and in particular China? Do you think a fresh round of QE3 or quantitative easing in the US is only going to bring about that fillip for Asia as well, or do you think they could have a trigger of their own?
Well, in terms of China, last week we did get news of the gross domestic product in the second quarter falling to 7.6%, basically in line with expectations. But if you look at most of the indicators there, it does appear that China is probably going to still grow for the year slightly above 8%, which is good news in terms of the global economy. I think that diminishes the possibility of perhaps a global recession. And part of the fears that the equity markets have been undergoing as of recently, obviously, is the possibility of a global recession. So I think that fear may have been lessened to a certain degree, but a lot, of course, depends on what happens in Europe. And as you can see, the domestic numbers here certainly indicate that Europe's recession is taking a toll in terms of economic activity in the States, in terms of exports and imports.
Right. Okay, Peter, good speaking with you. Appreciate you taking the time out and joining us on the show today.